Your weekly fix on finance and investing. This is the Corlin Economics Report.
We're back to continue our coverage of the 2007 Resource Investment Conference from the Vancouver Convention Center in British Columbia. It's time to tackle the topic of government manipulation of the gold market. Paul Warren here with Al Corlin of A.B. Corlin and Associates.
Talking with an old friend, James Turk, and another old friend who's perhaps one of the most enthusiastic people in the industry who I've ever talked with, and that's Bill Murphy. Bill, thanks so much for joining us.
Great to be here, Al.
Bill, now, James and I have irrefutable proof that the price of gold is in fact not manipulated. You're wrong. What do you say to that, buddy?
It's time for you to come back from the planet Pluto or Mars, wherever you've been.
Hey, I'm on Bill's side.
I know you're on Bill's side, but we got to get a rise out of this guy if we can. We've been talking about the pros and cons of, that's the wrong way to put it. We've been talking about, you've got a very strong camp on one side that say the price of gold is manipulated, and that's a vicious thing to do. You've got people that are a little bit more moderate, as I happen to be. I say, yeah, the price of gold is managed, no question about it. I believe it's being managed out of necessity. Okay, I think the U.S. economy would come crashing down if we went immediately from a fiat currency to an asset-based currency. Serious problems. Okay, those are kind of the two schools of thought. The other school of thought that you're on is that, as I understand it, the price of gold is being manipulated, and that's clearly the wrong thing to do.
Well, for so many reasons. One,
yeah.
I mean, it's everybody in our country, in the U.S., there was always talk about what the big bankers do to the little people. Well, if you're inside on a price fixing case, which all that this is, think of the money they have made over the years at the behest of our supposedly free markets. It's not right. Second of all, we don't even consider it a subject to debate anymore because the BIS, the Bank for International Settlements, has come out publicly and said they managed the gold price. I don't even know why it's even an issue anymore.
And you're maintaining, quite frankly, I don't either. And now you're maintaining, though, that is not a necessary action, but an illegal/immoral action.
Yeah, for so many reasons.
Okay.
And in addition to just the money aspect of it, look what they've done to these poor developing countries. You've got a President Bush, President Clinton going around saying they really want to help these people, the economy. They're concerned about the aid problems, the unemployment in South Africa, and so on. If the price was allowed to be free, and tell you where it was, they put hundreds and hundreds of thousands, 100,000 miners probably at work today, and each miner supports 10 to 12 people. So we're very hypocritical when we say how we want to help people, and then what we do just the opposite. We speak with forked tongue.
So to speak.
What
do you think, James?
Yeah, I'm in agreement. I think managing markets, intervening by governments is bad because it disrupts the free market process. We should be able to interact in the marketplace without having to deal with government intervention and all of the volatility that it results. You have to understand why governments intervene. They don't like what the free market is doing because the free market is responding to government policies, and government policies tend to debase a currency or do something that's bad, so people react. Governments don't like that when it happens, so they intervene to try to offset the bad actions that they did in the first place. So I think government intervention of all sorts, gold market, interest rates, you name it, it's disruptive to our way of life. It's disruptive to free markets.
Bill, how'd you get involved with GATA? What you are a man on a mission. There's no question about that. And a lot of people have said, well, the guy's Bill Murphy is kind of a Don Quixote. He's going after windmills, et cetera, et cetera. My comment on that is they're crazy. I think you're a very intelligent, well thought out individual. How'd you get involved in this thing in the first place?
I used to be a limit position trader in futures, so I know something about how markets work. I started my website. We'd heard long-term capital management was short 300 tons of gold. We knew when they went under, they had to cover it. And all of a sudden, we saw Goldman Sachs and J.P. Morgan Chase selling in weird ways every day as soon as gold got above 300. And then I heard some other things, and I said, this is rigged. It was, as a trader, it was the most obvious thing I've ever seen. And then somehow I got on CNBC. Ron and Sana, and that was the last time. It was January 1999, and as soon as I heard what I had to say, I haven't been on the show since. But we had two conferences, historic ones in South Africa and Dawson City. The people involved with us, as you might have heard John Every speech today, said a lot of these people are brilliant. That's not myself, but the guys that the kind of consultants that we have, like James and Frank Veneroso and Reg Howe, smartest people I've ever met in my life.
Frank Veneroso, though, I don't mean to put words in his mouth, but James and I just had a very interesting conversation with him. It's my understanding that Frank disagrees with you.
Well, this would be ironic. I'm not sure. He may short-term on the gold and silver market, but I would respectfully disagree with Frank. I can't talk about copper because that's not my specialty, but gold and silver are. And so far we've been right on target for 5 years, and I expect an explosion this year. And I could not. And Frank's my mentor, so I could not disagree with him more if he's bearish.
Yeah, James, you made an interesting comment about Bill's work. You said people who followed Bill, if they would have put their money where their mouth is, so to speak, they would have made a lot of money over the last 5 years. Well, there's no question about that. They would have made a lot of money in the sense that, not necessarily in gold stocks across the board, but they would have made a lot of money investing in gold. Now, if in fact the price of gold is rigged, why did the price of gold go up? Why has it more than doubled in the last roughly 5 years?
It's simple. And I go back to Frank again, who wrote a paper on this at the Ghana African Gold Summit in May 10, 2001. They're running out. And what they're doing is it's a controlled retreat. They can win battles here and there, but because the demand is so much greater than supply, and they're running out of central bank gold, the gold has to go up, and it will for years to come.
James, you look like you want to comment, so hold that thought for a moment while we take a brief break. We're at the 2007 Vancouver Resource Investment Conference with Bill Murphy and James Turk, and the Corlin Economics Report will continue in a moment.